And we are live. Hello, everyone. Welcome to a new episode of Bitcoin Talk, the revamped blockchain talk episodes on YouTube. First of all, life has been very, I'm not going to say tough, but hectic in my life. So, yeah, I know I promised to do more regular live streams. I'm trying to keep up with once a month. However, it's been 2 months since the last one, so my apologies in advance. Today's topic is going to be Bitcoin Treasury companies. Now, this is one which I wanted to do since the beginning of this year. However, I postponed it by reason, well, I knew that the hype in regards to, well, this topic would peak later on, and I'm going to say this month's actually quite a good time to do so. So, what shall we talk about? Well, Bitcoin Treasury companies, separating fact from fiction, highlighting important points. Why? Well, on my timeline, on various social media, and even people reaching out to me are asking questions about MicroStrategy, well, former MicroStrategy, now called Strategy B, and plenty of other Bitcoin Treasury company stocks. And of course, should we invest in them? Yes or no? Is it a good move? Yes or no? What are your thoughts and ideas about it? And I'm going to be brutally honest here. I'm not a fan of Bitcoin treasury companies for a variety of reasons. However, in this live stream, I did some pre-research. I'm going to try to remain as objective as possible. Not going to try to push my own opinion here. However, what you will see is research I've done beforehand and important aspects if for the case or in case of you are willing to indulge into buying stocks of Bitcoin treasury companies. And well, naturally, some knowledge that you need, some background that you need before you make the step indulging in said companies. Myself, I consider myself a Bitcoin maxi. I will always say Bitcoin first, stocks, there's no second best. So that's basically it. However, like I said, I'm going to try to remain as neutral and objective as possible. So let us begin. I'm going to do it like this. And well, a little bit of history. This is a little tweet from July 2024, 24th, height of the presidential race, and there was a Bitcoin reserve bill announced. This really is what kickstarted the hype. However, in true historical fashion, of course, things were brewing well in advance. People who visit my previous website called graciousInterests.com, now revamped as bitblock.org, will know that for a long time I've been writing about fear the whales in relation to MicroStrategy buying up big amounts of Bitcoin ever since 2020. And that sentiment hasn't changed with me. However, the real hype, the real kickstarting of the creation of various Bitcoin treasury companies really kickstarted during the presidential campaigning in 2024. The idea of the announcement of Bitcoin reserve bill, strategic Bitcoin reserves. I'm going to refer to previous live streams I've done in order to fully grasp what was going on here. Now, in the meantime, plenty of treasury companies have been created. And here is the top 100 public Bitcoin treasury companies. Now, as you can see, Strategy, Mara Holdings, XXY, Bitcoin Standard Treasury Company, Riot, Trump Media, Metaplanet, etc., etc. Tesla is also included, Hut 8 Mining. As you can see, Strategy here is going to be the biggest one. It will also be the main one on which we focus. Why? Well, all these others you are seeing here underneath, will have a common ground with strategy B, meaning that they have landed their playing books. That's for later. However, what we'll be discussing here, fact from fiction, are well-established things which can be easily researched, which you need to keep in mind. And as a fair warning, I'm trying to give to everyone here watching this video, well, to watch out for, really. Let me indulge you. My first warning is from a post I made earlier in July this year. Bitcoin treasury companies have the same playbook like FTX, Three Arrows Capital, and most venture companies in Web3 had. Leveraging their own crypto or stock, in this case, because we're talking about Bitcoin treasury companies, for more Bitcoin. Getting wrecked due to greed and believing Bitcoin would never correct due to a super cycle. If you go on a variety of social media, you'll see plenty of Shillfluencers for these Bitcoin treasury companies talking about super cycles, and that this cycle, finally, the cycle has been broken of bears and bulls and will be forever stuck in a bull market, which isn't true. If you've been following me since the beginning, you know what a Bitcoin cycle is. You know it is bound to happen. Like I said before, will happen again. This was a little reaction on Pierre Rochard. Plato, he doesn't understand how Bitcoin treasury companies are performing speculative attack and accelerating, blah, blah, blah. So up here, you already see Shillfluencers or Finfluencers trying to point towards another direction, not understanding the fundamentals of Bitcoin. And that's a first warning I'm going to give you guys. There's plenty of influencers who have Bitcoin attached to their name, acting as if they know about Bitcoin, but are nothing more than plain traders, either are new to Bitcoin or have created an image which involves Bitcoin, but have no actual clue what they are talking about. And I'm going to be honest, I'm a big fan of Predator, because ever since I'm following that guy, he has been making statements which are factually correct. Not well liked, sometimes blunt, but factually correct. Now, what else can I say about the FTX and Three Arrows Capital and most VCs? Well, like I said, same playbook. Everyone who was in the bear market cycle of 2022 knows about FTX and how they collapsed. They had presumably more Bitcoin on their books than they actually had. A lot of paper Bitcoin was involved. Their collapse, together with Three Arrows Capital, even Celsius Network, gave rise to a very thorough discussion about proof of reserves, on-chain verification, on-chain, to have the ability to verify on-chain who is holding what. Naturally, we are speaking about Bitcoin here. There's pseudonymity involved. You can't really, it's a hard time putting a real name to the address. However, when it concerns companies and finance, they are obligated to share certain details, especially when it concerns Bitcoin treasury companies. Why? They need to provide evidence on the Bitcoin they are holding. It needs to be verified on chain, and quite frankly, a lot of all those you're seeing here are lacking in proof of reserves. Why? Well, you can pick a name, a random one, and start researching what their online wallets are. And especially in the case of strategy, they are talking about third service provider, third service auditors who do it for them because of security reasons, yada, 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 yada. Most of the reasons they've been offering are plain bullshit. People have been talking about wrench attacks. Should they make it known? And I'm like, yeah, but you're a public company. Everyone knows Sailor. Everyone knows about the CTOs and other CEOs and even some of the other people who work with strategy. I mean, you can verify it on their website, and it isn't that difficult to perform a range attack on either of these guys. Their details are out in the open, so it doesn't really matter that they show their addresses. We know that the people involved own Bitcoin. That's most certainly enough. So you see, there's some, well, illogical arguments going on, but all of these are being used to say no proof of reserves. So that's one of these painly points, and we saw it on beforehand with FTX. They were selling off more Bitcoin than they actually had, so they defaulted and were bankrupt. Same case with Three Arrows Capital. They lacked liquidity, by reason there were no proof of reserves. And you will see it with the majority of those Bitcoin treasury companies. Most of the Bitcoin they say they have are more or less self-reported or audited through a third-party service provider, but no actual holding addresses are being shared, which is odd. And even on the blockchain explorer or even other tools you can use, you're not seeing centralized addresses, which is fine, but no address either being attached to this company. So that's a bit odd. There's no proof of reserves. Further, and this is one of the first examples I want to share with you guys, because this follows the playbook plenty of Bitcoin treasury companies are following. And it begins with H100 adopts a Bitcoin treasury company, health technology company, yada, 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 yada. And you see the author highlighted Bitcoin, 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 Bitcoin. Yay, they have Bitcoin and holdings. However, I invite you guys, because plenty of such screenshots exist, or even refer to the documents with Bitcoin being highlighted. I'm going to invite you guys to start reading it a little bit more comprehensively. And to me, well, of course, it's starting your own here in the first pages. It begins in this paragraph. As of today, approximately 46%, so where my mouse is here, primarily sourced from capital raises, including convertible loans and directed share issues. What does it mean? Well, that one sentence says, well, we are selling off our stock, and the profits we get from that, we invest in Bitcoin. Sounds reasonable, okay, very fine. However, do realize stocks are paper. Stocks can be multiplied. There's no real hard cap. So at this point, you're seeing a first crack, leverage. You're being leveraged by them from your money in order for them to buy Bitcoin. So with some normal reasoning, you'd say, okay, so they want Bitcoin. All of these want Bitcoin. All of them are holding Bitcoin. And they're selling off their stocks in order to get a better valuation of their stocks. So wouldn't it be more logical to forego these Bitcoin treasury company stocks and just buy Bitcoin yourself? That's my first argument. Naturally, people will be saying, yeah, but diversified portfolio, etc., etc. Yet, in the same length of breath, will they say you will have exposure to Bitcoin through these stocks, which we'll later on elaborate more on. However, that doesn't mean you're diversifying. You've got Bitcoin and Bitcoin stocks, and they're basically telling you it's the same. Yeah, no, that's not the case. What you're seeing here isn't diversification. You're having Bitcoin and you're having paper. So at that point, it becomes already a little bit weird. Anyway, Company intends to increase its Bitcoin holding based on investor demand and capital availability, particularly where investor demand is linked to the company holding Bitcoin as a reserve asset. With that sentence combined with the first, it's leverage, just like I said. Here comes another kicker. The exact allocation is determined by the board of directors while ensuring sufficient cash reserves for ongoing operations and strategic flexibility. No active rebalancing policy is applied. Bitcoin is intended to be held through both upward and downward market cycles, as the company considers the number of Bitcoin held rather than its short or medium-term price to be the key performance indicator for treasury and financial purposes. They're saying, yeah, we're planning to hold Bitcoin. However, the amount we'll be buying depends entirely on our own whims, meaning they might buy plenty more in the future, or they will be saying, nah, we're going to keep the reserve as it is, not planning on selling it off, between brackets. Because strategic M&A within... So up here they say... there's something else of important here. Announcement through press releases. Yeah, so intends to inform market about any executed Bitcoin transaction announcement through press releases on a weekly basis or early if required by applicable rulers. Company aims to establish a reporting framework for the following key metrics, which will be published. So in this last paragraph, they're saying, yeah, it's self-reported through our earnings. However, it's difficult because, well, you will be relying on audits. They will be letting go through by third-party service providers. Nothing on chain. Okay. Is there something else of importance here? If you look into detail, strategic reserve, yada 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 yada. Being a primary concern, the uncertainty. Basically here, the most important part, the intention is not to finance them by divesting Bitcoin holdings. Instead, additional equity or debt capital intends to be raised to finance such transactions. So basically what this little paragraph here means is they're going to say, yeah, we're going to try to not sell our Bitcoin holdings. Hey, positive, looks nice. Yeah, but the rest of it means intention is to not finance them by... Instead, additional equity or debt capital intends to be raised to finance such transactions, meaning they will get into more debt in order to get their hands on more Bitcoin. Looks nice for some maximalists, but you need to think further. Debt capital means we are going to do stock splits. More stocks are going to be printed, more debt be printed in order to hold Bitcoin. And people will say, yeah, it's hyper-Bitcoinization, etc., etc. Not forget, we still live in a fiat world, meaning you need moolah, money, in order to support it. And there will come a time that they will say, because that's the important word, there's the intention. It is not stated as an actual fact that they will do so. The intention is there. Execution is something else entirely. Depending on when they've bought, and considering it's been quite recent here, as I'm seeing 30th of June 2025, they bought near all-time highs. So depending on the corrections which will occur somewhere starting 2026, you can be guaranteed that the intention will fail and the execution might imply a sell-off of a part of the Bitcoin holdings in order to cover the debt calls. So that's what I mean with the very first cracks showing, because this little strategy guide you're seeing here from H100 is adopted and straight out of the strategy playbook, from the playbook of plenty of other Bitcoin treasury companies. This entire strategy relies on Bitcoin going upward forever, which isn't the case for anyone who's been longer than 4 years in Bitcoin or even crypto. So it is based on hopium. More on that later. And in an interview that concerns Bitcoin Treasury companies. This is a little interview from Bitcoin Therapist being shared. I'm not going to play it. You can see it for yourself when visiting his Twitter. But the important to note here, and I've copied it straight from the BTC Therapists saying, and which is a transcript of what this guy in orange is saying. As long as the corporate leverage trade remains profitable, meaning as long as Bitcoin Treasury companies are being hyped, as long as people are getting suckered into buying their stocks, will this remain? However, we are already starting to see cracks in the hype losing momentum. More on that later, but I will say it has to do with the various ETFs or derivative options and stocks being created by Strategy. Also, Strategy, some other Bitcoin Treasury companies are indulging in the hype train dying down. Further in this tweet, I'm naturally going to your well-known cycles indicating possibility of leverage trading. This occurs to crypto after every altcoin season. This will occur to Bitcoin Treasury companies. We saw it before. We will see it again. Mark my words. I know I will be getting lots of hate from people watching this video, trying to debunk it, but it is the case. Bookmark the video, bookmark my tweets, revisit it in 1.5 year time or even 1 year time. You'll see how everything will have played out. This is another highlight I made. I mentioned it earlier, needs to be said. Metaplanet is trying. Currently, it is the third, I believe. No. The Metaplanet 7th biggest Bitcoin Treasury company that they are buying Bitcoin near all-time high. You see what Strategy B has above all other Bitcoin Treasury companies is that they started buying in 2020. They went through the bear market, did a few buys, but bought more aggressively during the recent bull run. They're really accumulating Bitcoin at a high pace. And that's one of the reasons why I said I want to do a video now during the height of the hype of Bitcoin Treasury companies, where many are being created, many are being founded, many companies are adopting a Bitcoin strategy. They are almost all buying near all-time highs. It fuels the bull run, but at a certain point, and everyone who's been in Bitcoin for a very long time knows this will go down. At this point, social media is aplenty with, when will we reach the new all-time high? When will it peak? Because we've been going sideways, and up until recently, we did establish a new all-time high, but we want more, more, more. In the meantime, our Bitcoin Treasury companies buying up all these Bitcoin all-time highs, fueling the hype, but not having the long-term vision of buying when things are low. They are leveraging their stockholders, but are over-leveraging their own position, which will turn sour. I wouldn't be surprised if this list will see a drastic collapse in the near future of some of these Bitcoin Treasury companies actually going overboard, selling off their holdings because, well, they're indebted and can't cover their debt. Simple as it is. It is a highlight. Metaplanet is one of those examples. Plenty of others do as well. And I wouldn't even be surprised that Strategy B themselves will get into difficult waters at one point or another. Another example is the Smarter Web Company, Bitcoin Treasury Policy. This is a bit like this tweet here. Each 100 group officially adopts a Bitcoin Treasury strategy. But in this, I want to highlight something else. You see, some time ago, I had a little back and forth with people concerning Bitcoin treasury companies. And they said, yeah, but you have exposure and you can directly exchange your stocks for Bitcoin. This is from a company, luckily, that I saved the page, because generally it's hard to look for what their treasury policy is stated clearly. And like I said, it's always important to read such statements, because everything and everyone is hyping it up of, yeah, they bought Bitcoin that much, they leveraged, yada 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 yada. The important part is the policies. And Smart Web Company, well, is pulling it out like most other Bitcoin treasury companies are actually doing it. And there's a few important, I'm going to say, highlights here. So they make a statement, capital strategy. So I'm looking here. Traditional cash is on Bitcoin. Now, important financial promotion without limitation alt text. Where is it? Here. Surplus cash in Bitcoin. Bitcoin is a type of cryptocurrency, so lots of legalese, yada yada yada. The most important aspect comes here. Therefore, the value of company Bitcoin holders can fluctuate. The company may not be able to realize its Bitcoin exposure for the same as it is paid in the first place, or even the value the company ascribes to its Bitcoin positions due to these market movements. Meaning they know they can go in the red. So they're leveraging. So they highlight the risks, which is legalese, saying, okay, we understand the risks attached to it. And while it is great to see such an admittance, do realize that this is something factual. The risk involved that you're seeing here will occur. The movements will occur, that it will get lower than they bought in, especially if the Smarter Web Company or H100 or Metaplanet or whatever other Bitcoin treasury company has been buying on the all-time highs. Corrections will occur, and they will need to rely on a secondary aspect in order to keep their valuation up, in order to avoid bankruptcy. So they're basically saying here, yeah, we need to watch out. This also means that they see it as a risk that they might lose their Bitcoin. This implies indirectly they're not holding their Bitcoin in self-custody. It implies they're making use of a trusted third-party service provider, Coinbase, Binance, whatever other exchanges, Fidelity even, or whatever other exchanges. But it implies there's no self-custody involved, meaning it's paper Bitcoin that they are holding. It's a promise. This is one of the reasons why I'm saying there's a lot of paper Bitcoin involved with Bitcoin treasury companies. Most will have some kind of admittance like this one here, where if you read between the lines, there isn't any self-custody going on. Third-party service providers. And they mitigate the risks by admitting, yeah, we can lose the funds. Yeah, it's so one line in a plethora of legalese and text, but nonetheless, it is very important to remember and stand by. Anyway, there was something else here, and it seems in the meantime they adjusted it. Did something else. Liability. Significant. Yeah, so basically I think I've covered everything. There was something else about but I believe I highlighted it here. There was a little text here, but I can't seem to find it. Whereby they stated, yeah, we will sell off in case of bad markets. But anyway, let's continue. Now, first cracks about strategy and Bitcoin Treasury companies. Another crack, with that I'm going to mean what you should look out for. You see, in the logic of most of these Shillfluencers, they will say, yeah, because their value is pegged to Bitcoin and Bitcoin reaches new all-time highs, the stocks will go up forever. Not really the case. You see, this is being highlighted by William Next Level. I took this tweet because it is stated factually, and you can verify it on, well, plenty of websites which keep track of the various tickers of MicroStrategy and Bitcoin. December 2024, Bitcoin was at 95,000. Master stock per share, 410. Bitcoin in May 2025, valued at 103K. MicroStrategy, back or still at $410. On day of writing, 24th of July, still at 410. Bitcoin has been making secondary all-time high of near the 120K, but as of writing, 119. Weirdly enough, as you can tell here, they're the first ones. They've been aggressively buying Bitcoin for a long time. You'd think with the amount they're holding that their stock valuation would go up, but it isn't the case. It remains rather stagnant. There's, well, some volatility going on, but no new all-time highs are being established. How's that possible? Well, quite frankly, the reasoning is rather simple. We are dealing here with companies, centralized authorities. They are leveraging their own stocks. So it doesn't matter if Bitcoin reaches a new all-time high. Everyone who is holding Bitcoin will see a new all-time high for their holdings. We'll see that their Bitcoin has increased in purchasing power. But this will never be the case with Bitcoin Treasury companies. By reason, their stocks are being sold. Their stocks are a proxy for crypto. Their stock, well, I said are a proxy for crypto, no, act like crypto. Their stocks act like fiat money. It can be printed into oblivion. Currently is the strategy to keep the stocks below or at a certain level that it doesn't surpass, but it allows them to leverage more money in order to buy more Bitcoin and print more stocks. So they're printing themselves into oblivion. You see, one of the sayings when you are a Bitcoin maxi is that the money printer will go on and Bitcoin will eventually take over because it is the most or strongest money available. Because the dollar printed itself into oblivion, because there's no cap on the money printer. The same applies to stocks. It applies to the MicroStrategy stocks. It implies to all Bitcoin Treasury company stocks. They print themselves into oblivion. Simple as that. It is a non-tenuous position. They can't hold on for that long. Especially now that we're seeing, Bitcoin making new all-time highs, they remain at a certain level. You should think what will happen when Bitcoin eventually corrects. because the value of these stocks is derived from the Bitcoin they held. And debt will only be repaid through leveraging their stock in fiat money, of course, in order to buy either more Bitcoin or to continue operations. But if Bitcoin fails, valuation goes down, they will need to rely on their secondary assets or income in order to compensate. So the very second the bear market hits, prices you'll be seeing here won't be held. They will crash down. Fair warning. Is the website of Strategy B. Now, this is something that I've been thrown at numerous times in my face, where people will say, yeah, but isn't this positive? Look how nice it is. And those numbers all in green, average trading volume, 2% down in the last 30 days. And you can do it for all their derivative stocks. That's Bitcoin, so I'm not looking at that. So STRF, Stark, STRD, Master. I'm not even going to start looking at what these are. I know these are ETFs and derived options and preferability, whatever financial bullshit term you want to throw at. Most important here is the incurred debt they have, together with the dates they will need to be paid back, I'm going to say. So yeah, those I find important. Maturity 4.6 years. 2028, you'll see that perhaps it will be the first reckoning for Master. So you see it is their website. It's nice. Shares outstanding, class A, class B. So plenty of data, you can bullshit your way out, but to me, all these charts, all this history are nothing saying. Of course, they will act as if they're better than Bitcoin, you see, because they're saying, oh yeah, look at that, standard error of returns, 30 times more than others. Bitcoin is only 8.9 times. We're doing better than Nvidia, most of whatever. What I find interesting are these things. Strategy paused Bitcoin buys last week and clarified that shareholders don't own its BTC, not your keys, not your coins. Remember what I said earlier in this live stream, about 20 minutes ago, I think, where it concerns, even less, because I believe I was hoping to find it here. But anyway, most of them, so the H100, Metaplanet, etc., are all following the Strategy B playbook. And there's been a lot of discussion going on in regards to exchanging the stocks for Bitcoin directly. And a lot of apologists say, yeah, you could do so, up until the point this was shared, and even other pages from back when it was called MicroStrategies still, when it was highlighted and stated plainly, you cannot exchange your stocks for Bitcoin directly with us. You will need to sell your stocks, and with that money you need to buy stocks. And people say, but it's fine because I'm making money. This proves the fact that you can't exchange it directly. It also means that you are not eligible to Bitcoin itself, that you're not exposed to it. That's basically what this is saying. And for the people who say, yeah, but it isn't written anywhere, I'm going to say, oh, yes, it is. However, in true Treasury style, you need to go to Strategy B and need to search for financial documents. I'm aware here that I'm already on the correct page. If you go, I'm going to highlight it here. Come for corporations. Is it that? No. You will need to do plenty of research. Perhaps Strategy Hub? No, isn't that either. About? Perhaps it's the press releases. No. Because, oh yeah, it's here. So needed to look, came a bit quicker than needed. However, what I do want to highlight are all the legalese forms, which you will need to draw through. Points for transparency? Yeah, might be. However, what you need is to find the correct number. And with a little bit of internet magic, you can pop it up after plenty of research. However, I did a research for you, so you guys might say, yeah, but it was easy because you showed it to us in a few seconds time. Believe me, before I had the actual document, ta-da, actually from their website, I opened it up and researched it earlier on. It took me about 30 minutes, to find it. First to find, well, it among the press releases, because at first I thought I was wrong, up until I started looking exactly at form. You can do the research with me here. Form 8K, no response. So you have to go over there. Nope, it isn't even in the press releases. Where the hell did I find it? Oh yeah, investor relations. That's it. So was it here somewhere? Financial documents. Here it is. In the archive. Yeah, you need to look a little bit. From 8K. Yeah, and then you had plenty here. Which one is it? Well, luckily, nope. TFTC shared a screenshot, April 7, 2025. Need to go April 7, 2025. That's a report, and that's the one which is opened here. Now I'm going to do a quick peek because I did some research, 16, 18, 22. Page 16, most important part. What do these forms state? Well, how it impacts the structure. Highlighted here. Part of our Bitcoin strategy, we expect to incur or continue to incur additional indebtedness and fixed charges, and we expect to issue additional preferred stock, meaning we will be printing stock continuously for the foreseeable future in order to buy more Bitcoin. Basically what's being said. If our enterprise analytics software business does not generate cash flow sufficient to satisfy our financial obligations, including our debt and cash dividend obligations on our preferred stock, we intend to fund our obligations using cash proceeds from equity or debt financings. Our ability to obtain equity or debt financing may in turn depend on, among other factors, the value of our Bitcoin holdings, investor sentiment, and the general public perception of Bitcoin, our strategy and our value proposition. Meaning, yeah, we rely on hype. That's basically what that sentence is telling you. Meaning that once the hype dies down, the entire pyramid collapses. Sounds familiar? Yeah. Accordingly, a significant decline in the market value of our Bitcoin holding or a negative shift in these factors may create liquidity and credit risks. So, as such, a decline of such shift may adversely impact our ability to secure sufficient equity or debt financing to satisfy our financial obligations, including our debt and cash dividend obligations. These risks could materialize at times when Bitcoin is trading below its carrying value on our most recent balance sheet or cost basis, meaning they are admitting the risk that Bitcoin may fall beyond their level of acquisition and that they will incur heavy debts which need to be paid back, which becomes a feedback loop, and they will need to print more stocks for selling in order to leverage their public and hype, etc. And yeah, it's a downward spiral. As Bitcoin constitutes the vast bulk of assets on our balance sheet, if we are unable to secure equity or debt financing in a timely manner, watching here, unfavorable terms or at all, we may be required to sell Bitcoin to satisfy our financial obligations. We may be required to make such sales at prices below our cost base or that are otherwise unfavorable. Meaning, yes, they hold open the option to sell off their Bitcoin should Bitcoin fall under the average purchasing price. Naturally, they will try first to leverage their secondary incomes, but they might and will probably sell Bitcoin should their books turn big and red and no longer be able to leverage their stockholders. It's a risk, it exists, but it means the strategy isn't as closely hammered down as people think it is. The risk exists, and they're admitting themselves, hey, we'll be selling off our Bitcoin if things turn sour. This basically states, we might default on everything and declare bankruptcy if things turn sour very, very bad and very, very hot. And that's one of the reasons why I stated. Because they had Bitcoin backing and assumed they would be safe. However, when the bear market hits, they needed to liquidate, sold off their Bitcoin holdings, dumped their Bitcoin, but at the same time also meant that the remaining Bitcoin they had became less valued. When bankrupt, the entire pyramid collapsed. Same thing with strategy here. And they are even admitting to it. So on that account, do watch out. Page 18 was also important. Another admittance. Not going to get further into it. That's their own business. 18. Here they're saying they're mainly on the Coinbase exchange. And it's highly volatile, meaning that the price fluctuations in their stock are indeed dependent on Bitcoin's volatility. Another thing, which is quite important because Saylor has been sinning on one of those basic statements, which is Bitcoin does not pay interest or dividends. Yet at the same time, each and every time Bitcoin is being purchased by Strategy B, you will see and hear Saylor say, we have now a yield of X% on our stock. Meaning, there is no yield. Plain and simple as that. That's the basis. The yield he's talking about is on the stock itself, not on Bitcoin. Meaning, well, there's leverage involved, which is bad. They also say, we lack a diversified portfolio, so we are entirely reliant on Bitcoin. Now, some Bitcoin maxis, and I partially agree with them, might say, that's very heroic of these guys. They understand Bitcoin, they go all in. From a financial point of view, it's bullshit. If you have a iota of financial insight, you must have diversified portfolio. Not a portfolio of only stocks and only Bitcoin. No, you can have both. You can have gold, Bitcoin, stocks. The more types of assets you have, the more steady and trustworthy your company becomes. Saying we're going all in on a highly volatile asset, not a good move. Not a good move, especially if you are incurring debts. Because that's the next title they're saying. Purchase Bitcoin primarily proceeds from equity and debt financing. We are issuing debt in order to buy more Bitcoin. And Bitcoin is our primary asset, which is volatile. Bad financial move, guys. Bad financial move. Also, factual statement. But they tend to forget Bitcoin is volatile. And while they say, yeah, under different market conditions, yes, but what you guys are doing is just bad financial behavior. All in on one asset, no safeguards, understanding the risks, and exposing people to leverage while getting leveraged yourself. I mean, this is the playbook which ruined FTX and 3 Arrows Capital. You keep on repeating the same mistakes. This underlines one of the most important aspects where it concerns strategy, relating to our custodians. It implies, once again, they do not self-custody their Bitcoin, which would have been a more favorable use. But security-wise, they will say, yeah, but we do it with a custodian. Where these custodians, Coinbase, they admitted it earlier on in the paper, third-party service provider. However, it implies that responsibility falls back on Coinbase. It also implies, yeah, there's no self-custody, so there's nothing to see on chain. Not your keys, not your coins. Can you really say they, Strategy B, are really holding their Bitcoin? Or are they dealing with paper Bitcoin in their books? I'm going to say the latter, which means they aren't a real Bitcoin Treasury company in my books. They're just paper shuffling. That's the basis of it. What was another important? 22. Potential variability in earnings that we may experience in the future from holding or selling significant amounts of Bitcoin. The important part here is holding or selling. Once again, highlighting they have the ability to sell off their paper Bitcoin. Page 23. So yeah, basically, once again, covering everything else what we've covered before, the bad financial things. Masty, what is this? Yet another stock, an ETF of the Master stock. So Master is a stock representing the Bitcoin Treasury Company Strategy B. And they launched Strategy B itself, Misty, MicroStrategy ETF. And this stock, I'm going to highlight it, is frequently quoted by Bitcoin Treasury Company fanboys, sailor fanboys, of paying out dividends to them so they can buy more Bitcoin. And yeah, it implies indirect exposure to Bitcoin and making money, etc., etc. Now, the obvious mistake is them being paid out in fiat. Naturally, would have been better if they were paid out in Bitcoin, but it isn't the case. It's all in fiat debt. And basically, this here is the website. Like I said, Master Option Income Strategy. You can read it through. However, why am I highlighting this? Well, because of this. Misty was launched some time ago, and the numbers in regards to payouts is rather interesting. You see, for YieldMax ETF distribution, just click here. Distribution per share, and most recent ones first. So this 2nd of July. And what do we see here? Some keen viewers might have noticed. Upon launch, very early, 3rd of April 2024, per share 4.12 or 13, went down 2.52, 3.3, etc., etc. And gradually, the more we move in 2025, we see, well, it going downwards a few times a year, hitting $4 when Master reached its all-time high. But you see a trend here: $3, $2.27, 2.2, 1.3, 1.37, sorry, 1.33. Oh, sudden pick up to 2.37, 1.47, 1.23. Something is going on in a downward spiral. And I'm not the only one to have noticed. Payments are dwindling. There's your first signal that the paper Bitcoin derivatives are trending to failure. It asked all your Bitcoin company treasury stocks. The hype is dying down. Bitcoin isn't making any more all-time high moves, or even if it does, we're noticing the Bitcoin treasury companies are not keeping up with it. They're not making new all-time highs in valuation concerning their stocks. Master is not even reaching new all-time high despite its extending Bitcoin treasury and backing. Realization should start setting in. I gave you the quick rundown: May, June, July. But I wanted to include the rest here, and you see the downward trend. When was the last time it was above $4? November last year. And since then, it has been going down. Just a little peak here in May of this year, where it reached once again 2.37 before heading back down, trending towards 1. It's not a good sign. It implies something is ongoing. Does it have to do with how everything is built up? Yes. Does it have to do with Master MicroStrategy stock losing its steam? Yes. Why do I state it? Because, quite frankly, this is truly how it is built. BTC is their main value layer. Master derives its value, so the MicroStrategy stock derives its value from Bitcoin. From a MicroStrategy stock, you have STRD, something new. It's an option, don't know what it is, but it directly derives its value from it. From that, STRK, STRF, and convertible notes. If this one goes down, not by sell-off, but by lowered valuation, as we see in bear cycles, this will go down harder. As a result, this will as well. All that is built on top, a collapse of the pyramid. Because each time with each layer you have supply and demand. Demand on the Bitcoin side can be continuous. Supply is always limited. Bitcoin will always go up over time, but we'll see corrections. But the next layers, as we saw in this document here, on page 16, it is based on hype. You also have supply and demand, but hold on a second. Yeah, supply and demand, but there's no fixed supply, and demand is hype. So the demand dies down, supply increases. Devaluation. Everything which is on top here. Bitcoin might be the value maker, but if this one fails tremendously, everything else here fails even harder. Combine it with if Bitcoin loses its valuation and enters its bear cycle, goes down, you can rest assured that this layer with its very own supply and demand will get hit by Bitcoin, but due to being based on hype, you will get hit much harder, which will result in bankruptcy at the very end. There's a few charts that I want to show you guys, which once again highlight that the hype is dying down and why you shouldn't really be, why you should be watching out for Bitcoin Treasury companies, because they are showing what eventually will happen. And you can see, oh yeah, master stock price, you see, last all-time high dates from November 2024 approximately. It went down, and even with recent Bitcoin all-time highs, new ones, well, you see, it never really reached new all-time high levels. I'm zooming in here. I'm going to take 1 year. You see here, that one to 473, November 2024. 455, 17th of July. In the meantime, Bitcoin hit all-time highs twice, that same time period. It's been pushing, while MicroStrategy has been remaining quite constant. Now, is that possible? Like I mentioned earlier, all having to do with stock printing, all having to do with hypes dying down. Because if you go back a few years ago, you only had MicroStrategy, the stock, and you didn't have the STRD or STRK, STRF, you didn't have the MSTY, you didn't have any other stock or derivative option associated with Strategy B. They all have been created in the last couple of months. I dare even say since the beginning of 2025, when it comes down to it. Why? Because the hype has been dying down. And with each derivative option they are launching, they're attracting new potential leverage. Because the base layers, STRF, STRK, STRD, and MSTR or MSTY, are losing hype. They're losing their momentum. And that's basically what we're seeing here. One of the reasons, despite the new all-time highs that are being achieved, that the MicroStrategy stock is having difficulties maintaining or reaching new all-time highs. It's remaining fixed. It's flatlining once again. Also interesting, this chart, plenty of people will quote to say, yeah, but you can see the correlation between their Bitcoin holdings and the valuation and the Bitcoins per share. Sure, it's correct. Important to note here is a sudden dip for a stock split which occurred, because of course went up, shares were being sold, bought, etc. What I like to show is this one. Stock versus Bitcoin dynamics. And you can see the hype is dying down here because, well, frequent purchases made it so that the master price, stock valuation price, is akin and following Bitcoin trends. However, there are a few disruptions, as you can see. But here, BTC price keeps on going up, but suddenly it isn't as level anymore. Trend lines show you that while Bitcoin is going on up, the MicroStrategy hype is dying down. They're remaining flat, devaluing over time. Even here, you see a little uptick because Bitcoin went in uptick and Bitcoin is staying at the same level, but at the same time, our MicroStrategy valuation is going down. How come? Hype is dying down. People are selling off their stocks. There's no hype anymore. And that's one of the bad things which is occurring. enough multiplier, even that one is going down. It implies, well, they are, well, MicroStrategy, the company itself, has exposure to Bitcoin, but the hype of their stock is dying down. People are waking up to the fact that they are being leveraged. It is, as I said in the beginning of the video, why should you invest in Bitcoin Treasury company stocks where Bitcoin is their main value maker, whereas instead you can buy Bitcoin, which is the actual value maker itself? It makes no sense to have exposure to these stocks and give people your money with which you could have bought Bitcoin. The amount of money invested in all those Bitcoin treasury companies by traders and stockholders was better off directly injected into Bitcoin, into self-custody for the people themselves, not in these companies. You see, these kind of companies, despite people saying, yeah, it's hyper Bitcoinization, etc., is one of the reasons why Bitcoin was created. Against the TradFi system, you are being sidelined to see things in dollars, whereas you should be seeing things in Bitcoin. Whereas your focus should be on Bitcoin, you're seeing fiat money to be made. It's a bad move. And as you guys can see here, because I'm on the 1 year, but 6 months, in last 3 months, Bitcoin is rising, whereas the hype is dying down. Yeah, that's some additional data. So yeah, I think I've made my points here. I'm going to slowly over here start ending the live stream. Little remark here from Peeps Nuts. In the long run, Bitcoin will outperform all other coins. It's a matter of time before human errors and human tendencies spoil the altcoin market and lose trust. I dare say here, there's always a sucker born every so often. Human greed, well, it's a cardinal sin, but it is inherent to our nature. I can say a lot of things here in regards to what you say. Partially, I agree. Partially, I disagree. Reality is always a subtle lover. It isn't really about spoiling a market. It's moreover people waking up to the flaws of their reasoning. And it's a learning curve. Bitcoin has a learning curve. Everything has a learning curve. Bitcoin treasury companies are akin to the crypto and altcoin market. But it's something new because this time it's really TradFi trying to get into the Bitcoin markets. It's something new, and there's plenty of lessons which need to be learned. And that's one of the reasons why I did this live stream and why I highlighted the K8 documents, highlighted the H100 paper, and told people to read in detail, think about the words that have been written. Because quite obviously, the flaws are mentioned in plain daylight. The flaws, the errors, the facts, and the fictions can all be debunked simply by reading a few of their statements, strategy statements, etc. So really, wake up, be on your guard, do not fall for the hype, because as we saw, being admitted by Strategy B itself, hype is what they thrive on. And this is something which is prevalent in the altcoin market as well. They rely on hype in order to have as much liquidity streaming towards them. The very second the hype dies down, liquidity dries up and the project fails. You see it with altcoins, see it in the general crypto market. We will be seeing it with Bitcoin treasury companies. With that, I'm going to say thank you guys for watching. Hope you learned a few new things here. And with that, I'm going to say bye-bye. Up until next time.